Previously on Peculiar Exchange.
The 20 moving average is key. I use that. That's my baby. I do that with trend. I don't even really need no indicators, but that 20 moving average is clutch. It just show you what trend at. And one thing I seen about price, they ain't trying to poke me in my eye. So what's good with it? Hey, if you like the jewels that I'm delivering today, don't forget to like and don't forget to subscribe. And do your due diligence and comment. Now let's get into this video. Okay, these two indicators will basically crash the markets if people follow them correctly. The first one is the MA, and then the second one is the AE. Alright, the first one is the MA, which is the moving average. The moving average is basically this yellow line right here. It's telling you what trend is going. If you see that price action is under the MA, then guess what you go do? You go sell. You're looking for sales majority at the time. If you see it above the MA, then guess what you're going to be doing? You're going to be buying. It's really that simple. All right. The second indicator, which is the AE, you pair it onto the MA and you go be dead. What is the AE? Let's start off by saying that. It's the average emotions. That's the personal indicator inside of you. When you do a top-down analysis, that indicator inside of you will let you know if you over leverage, if you're doing too much that you're not prepared for. So that's why you do a top-down analysis, because if you see on the higher time frame, okay, the market is under the moving average and the trend is down, you will be looking for a sell. You ain't gonna see it dropping and then see it go to a low and be like, oh, okay, it's gonna reverse. No, it's gonna drop probably another 15, 20 pips before it even do a slight retracement, before it go all the way back down. So that's the importance of the AE, your average emotions. See? And we go and we go look at the chart and we can see, when you don't do a top-down analysis, you won't be able to tell what the market is really going at. If you plan on holding a trade for at least, I say a few minutes, hell, which most people hold trades for more than a couple minutes. Sometimes you get caught in the trade because of some stupid stuff. So if you getting caught in these trades, you need to have an overall understanding on where this market is going to go at. That's why you do the top-down analysis. You start from the 4-hour chart all the way down to at least the 5. And then you use the 1 minute for your entries to see how tight it is. Look, we can go to the 1 minute chart. We'll see how much it respects the moving average. We'll see how much the trend is respected. Okay, we on the end of the day and we can see the moving average on the 1 minute and the 5 minute chart. As you can see, on the 1 minute chart, which is on the left hand side, it respects the 20 moving average to a T. It's just slowly going down. I prefer you not to trade around the end of the day because the market get real slow and it can get real choppy. But as you can see, at every point, it respected the 20 moving average, even on the 5 minute. It did a little break of structure within the 20 moving average and did like a slight consolidation for about 30 minutes. Hey, that's all a part of the routine, But when you follow that 20 moving average in your AE, your average emotions, don't be over leveraging, because you see how it broke right here. If you over leverage, then guess what? You just blew your account when it just did a slight retracement before it went up. And I've done it plenty of times. I'm not even gonna lie. And to be honest, I do that when I'm not prepared, when I'm probably at another location and they ain't did no chart breakdowns. So I'm gonna keep this short and sweet. It ain't much to it. People, they like to drag it on and do all this other stuff, and it don't take all of that. It just take you to take your time to average things out, and then once you sit down, the market will tell you where it's going at, and then you follow it. Don't be seeing the market go one way and then hope that it turn around and go the other way. You go lose. I'm just letting you know. So yeah, man, I appreciate y'all rocking with me. Like I said, don't forget to like and don't forget to subscribe, because ain't nobody gonna deliver this content the way that I'm doing it. I'm doing it in a different way, a strange way, peculiar exchange. So I appreciate y'all watching and y'all rocking with me, and we gonna get back with another one.